I'd like to welcome Terence Tobin to present to us. I've known Terence for many years. He is unique in the sense that he really gets to understand his clients on a personal level and then gets to understand what their financial needs are in the short term and in the long term. Very down-to-earth person, very personable, and that's why he's built a successful business. Terence started his career many years ago at F&B, and for 6+ years has been running the Rich Ideas Group. And I think we're really going to get some valuable insight from Terence. So Terence, enough from me. Thank you very much. Over to you.
Jonty, thank you very much for that introduction. Yeah, 15 years in financial services, eh?
Sorry, one more thing I forgot to add is, if you do have a question, please insert it in the chat box. I'll go through the questions and I'll ask Terence the questions at the end. Thanks.
Cool, perfect. And all questions are welcome. So there's my contact details as well. Don't jump onto the websites yet. Let's have a chat first. So one of those interesting alternative investments that Jonty was mentioning, and we're all used to taking on debt at some point in our lives. We're all used to paying debt, and we're all used to paying prime linked interest rates at the bank, but we're not used to earning them. And that's why today I wanted to chat about CPI linked returns and lending as an asset class. Now, if you think of lending as an asset class, it's not usual to us as the man and woman in the street. However, it is a fantastic one to add to your portfolio as a small portion of it. Some of the unique benefits of lending as an asset class is that it is highly regulated, which you would expect. Your funds are protected. And what we are able to do, and when I say we, I'm talking loosely, that's Rich Ideas. We've partnered with BC Funding Solutions, who are linked to a body corporate independent association. And we're a network of advisors that provide this alternative asset class to our clients. And what we're going to do and show you how we do it is, instead of you always taking money from the banks, we're going to show you how to be a bank and how you can lend money and earn a great interest on it. We'll show you how we protect your funds. I'm going to show you how we smash CPI linked returns, and how this asset class can be quite complementary to the 4 other asset classes that are traditional in our investment space. So let me touch on that for a moment. For most of us, and we classify ourselves as retail investors. So if you have a pension fund, a provident fund, retirement annuities, your ETFs that you might hold in a tax-free savings accounts, places like that, you have 4 main asset classes. You're going to hold cash, bonds, and think of bonds quite literally or very simplistically. A bond is where you're lending money either to a government or to an entity for a defined period of time at a defined interest rate. So you're already in that lending space. We'll then have property, so you can earn your rental income, as well as then equities. So we have some capital growth by buying into companies listed on various stock exchanges. You're going to earn some dividend streams if they are dividend paying companies. And these 4 asset classes are available to us both locally, so within South Africa, and globally. And when you structure an investment portfolio, often the benchmark that's used is to outperform inflation, CPI. And essentially that's your cost of living. So the reason why you're all going to be investing is you want to make money over the longer term. And by rewarding you for saving that money and not spending it today, or investing that money and deferring your spending, is you want to make sure that it grows. So here's how lending as an asset class can help you with that. Now, the biggest one that comes up often is the certainty and predictability that this product offering can provide. You have absolute clarity on where your funds are going, how they're being used, and what interest rates you are being paid on the money you allocate. So I'll give you a little bit of background into the company itself, BC Funding Solutions, because those are the folks that facilitate this. Rich Ideas and myself and my team, we assist from an advisory perspective. We want to make sure this is suitable for you in your portfolio. And also, as Jonty alluded to at the beginning, in what percentage of your portfolio, because this shouldn't be 100%. No asset class should ever be 100% of a portfolio. in my opinion. So BC Funding Solutions specializes in special projects and arrear levies for sectional title body corporates and homeowners associations. The specific reason for that is it is a highly regulated space governed by the Sectional Titles Act. They've been providing funding for over 12 years. Significant amount of money has been placed into the market, 1.4 billion rand. It's in excess of that now. And there's over 3,700 clients. Now, clients can be you and me as individuals. We can do it as partnerships, companies, and trusts. And last year, I was their first consultant to set it up for a Stokvel. So anything's possible. I've also got international clients. So you might have South Africans that have gone abroad, or you have family that are overseas that want to get such returns that we offer. Now, what is the money used for? Well, BC Funding Solutions is part of Sectional Title Solutions, and the funds are used for arrear levies. It's a legislative requirement as being part of a body corporate or homeowners association to pay your levy. Sadly, some people don't. So the funds are used for that. They're also then used for solar, fiber, and other related expenses that a body corporate might need. There's been some other interesting business ventures that they've tapped into, like solar and 12J last year or the previous years. And some of the partners that provide the intellectual property, the safety, the security, and why this gives such peace of mind. So I've spoken of BCICA and BC Funding Solutions. We have Gale, who's your cash custodian. Think of them as the escrow account. So when you pay your money in, no one touches that. Only this company called Gale, who are licensed and regulated by our Financial Sector Conduct Authority. They're an FSP in South Africa. And a big one here, and I don't want to forget, so I'm going to mention it right now, is they have 50 million rand fidelity insurance on each transaction. So unless you're going to invest more than 50 million rand in one go, your money is safe and protected. Hollard provide an insured benefit. Worksman's attorneys do the legal and contracts. Erasmus, Moonstone, and the others involved. A very important one, which happened about 18 months ago, there was a JSE bond listing. There you needed R1 million or more to get in, but that to go through the JSE requirements to list on the exchange, as you can imagine, is quite a due diligence process. So everything, firstly, is available to you prior to allocating your funds. And we've got some significant partners and service providers that have assisted in making sure, as I want to call this, safe as houses, where your money is protected. Now, part of my business and what we do at Rich Ideas, hence the name, is we want to help our clients create wealth. We want to share ideas around that. And many years ago, I saw this product option. I did almost 2 years worth of due diligence. And before I'd ever recommend it to any client, I put my own money in. I have now 3 funds running with BC Funding Solutions. I'm going to open my 4th one this year. And they're there for various reasons, and that we can always chat about after. Here's the capital security, ladies and gents. This is probably one of the most important slides you're going to land on today with me, is how safe is my money? Because I mean, who wants to put their money into something and lose it? That's not why I'm here as a financial services provider, financial planner. And as John T alluded to, 15 years in the profession, I want to still be around for another 50 years. So we provide funding, and we take some of your money through BC Funding Solutions in a tried and tested legislative environment. All big, complicated words. Sorry about that. But what it basically means is your money is safe and protected. Here are some important ones highlighted in red. Your money is secured by the entire development. So the entire scheme, all 50 units, 60 units, 100 units, however many are in that scheme, there has been no loss at all to any client in this space since 1998, when this legislation came into effect. That is ultimate peace of mind, absolute ultimate peace of mind. And having used the product now with my clients, we're 3 months short of 6 years. I can attest to that. And a big one, and this is recorded, I've got my money, my family's money, my dad's pension money. Imagine me losing my dad's pension fund. Yeah, not a good idea. From a risk perspective, you can think of this somewhere between cash and government bonds. So it's about a 2 out of 10 on the risk scale, and further reinforced by the listing on the JSE. Big one here, I never touch your money. BCFS, never touch your money. Everything goes through Gale, and that's where I said that 50 million rand fidelity cover in place. And that's further protection. So we've got so many levels of safety and protection built in. There is extensive and intensive due diligence done that we can get through to. I do have an info pack. I'll give you details at the end, which we can send you to make sure, again, your money is safe. One of the things that are done is funds are never lent to a sectional title scheme that is in excess of 10% of their municipal valuation. So if that whole scheme, all 100 units, is worth 100 million rand, they will never be allowed to take more than 10% of that valuation. Having worksmen's attorneys assist from the legal perspective and drafting the contracts. And then, should you wish, there's a capital guaranteed benefit provided by Hollard. And an interesting one there, they carry that on their own balance sheet. It's not reinsured. So that shows how the confidence they have in the product and the offering. I hope you're all keeping up. Remember, drop your questions in the box. I'll be glad and happy to answer at the end. So we've got 4 main offerings. Excuse me while I take a sip of water and I can run through it. As I'm sure you used to, if you've ever had car finance, a home loan, personal loan, credit card, you will know that any interest rate given by a bank is quoted as prime. Now, prime is what's set by the South African Reserve Bank. That's the repo rate. The banks then set the prime rate, which is 3.5% above. So today, as presenting, prime is at 10.75%. As you can see here, all the returns quoted are prime plus 3 or prime plus 5. That's an annual figure, ladies and gents, not per month. That would be amazing. Probably be a Ponzi scheme if that was the case. So prime plus 5 on portfolios where your interest accrues daily and compounds monthly. Here we have where the minimum contribution or in amount that you would allocate is 50,000 Rand. And funny, John T, your slides align to that quite interestingly enough for people over the next 12 months. So what this means is we put in 50K today, you will have interest calculated every single day. And on the last day of the month, it's compounded. So next month now, you're now getting growth on growth. And at this current interest rate, prime plus 5, which today is 15.75%, your capital will double in about 5 years. Quite impressive, isn't it? Next to that, if you don't have at least the 50,000 Rand, you could start with 1,000 Rand a month. And that is a 5-year commitment. You're going to allocate 1,000 Rand a month for the next 60 months. You will also earn a rate of prime plus 5. As mentioned before, my father, who's in their income product, his pension money, and we have a number of clients in this product because we're able to give you a 13.75% return. That's calculated daily and paid out every month so that our pensioners and those who need an income can have a sustainable, predictable living income, stuff to make things happen. Because I'm not sure if you've looked out in the market, but cash, you're probably getting around 5%. Income funds, if you're lucky, around 7 to 8. Maybe government bonds are touching the 10%. Here we're giving you 13.75. And then the insured capital offer by Hollard, minimum there is 250,000. The interest there is calculated daily, compounds monthly, but how the guarantee works is exactly at month 60, your capital will be repaid to you in full. These two on the left, where we're having our compounded growth, the average term is 3 to 5 years. It's up to those body corporates to repay. Your funds are diversified amongst dozens of body corporates, ladies and gents, and that's all in the contract document. Again, full disclosure. So much like buying an ETF, if you know that, your money is diversified between dozens and dozens of companies, properties, cash and bonds throughout South Africa and the world. Same here. This is a local-based product. It's only in South Africa, but you get a rate of prime plus 5 and a rate of prime plus 3. This is interest only. So there's no capital gains tax. It's interest only. Once again, I'm hoping you're beginning to see this theme of certainty and predictability. I want to touch on now the track record, and I've just done this till the end of December. Now, prime lending is normally very stable. The Reserve Bank seldom makes changes, but however, with COVID, this was our COVID interest rate cuts, as we all experienced March, April, May, give or take, of 2020. So you saw it drop, but your rate is always prime plus the 5 or plus the 3. Now we obviously had a plateau while we were in our pandemic and lockdowns, and interest rates have ratcheted up, as you've probably experienced if you've still got a home loan or a car loan. It's gotten a little bit more expensive to pay your bank, but the clients that are in this product are absolutely loving life right now because they are getting returns of almost 16% per annum in the growth products and almost 14% in the income-based products. Spectacular, absolutely spectacular. Reporting-wise, you will get a statement by the first working day of each month. It will show you your capital allocation when it was done. And there's that name again, Gail. You paid into the escrow, into the clearing, the cash custodian. The number of days in the month. Now, as you can see here, this money came in on the 10th of May. So it was only allocated for 21 days. The interest it earned was 12% rate and almost 7,000 Rand worth of interest. There it gets allocated. So now your opening balance is the million plus your 6,900 in interest for a full 30 days in the month of June, earned you almost 10 grand, and so on and so on and so on. You'll see now interest rates started to rise last year. There they go, as you can see, climbing up. And in this period here, give or take 18 months on $1 million, this person earned 135,000 Rand in interest almost. You'll get this statement every single month. The first page looks like this. The second page has the daily interest calculation. What's very cool to see on that statement is if you had put in $1 million, this is making give or take 400 Rand a day. And you can be like, wow, I'm earning 400 Rand every day. When interest rates change, whether that's up or down, the next day, your product will update accordingly. Meaning, in this case here, you'll see interest rates adjusted from 14% to 14.75. The Reserve Bank generally does this on the third Thursday of each month, around about 3:30 in the afternoon. Whatever adjustment is announced from Friday, yours will be adjusted accordingly. So there's no waiting periods. Also, every month you will get an SMS showing what your interest has earned and your current balances. Here is the income product, which is the prime plus 3 product. Same type of person, put in R1 million. Here you'll see the interest earned, but it's been paid out to this person so that they now have their pension or their income that they need to live each month. And you'll see then, obviously, because the interest is paid out monthly, there is no capital growth. So a combination of the two products is absolutely spectacular. And you can migrate between the two as life changes and as your situation and circumstance changes. Ladies and gents, before I go on to my wrap up with regards to predictability, we've covered that. Certainty, we've covered that. One more that's critically important, and I didn't make a slide because I wanted to explain it to you, is what are the fees? Because nothing comes for free, right? No free lunch, as they call it. So the fees on this product do exist, but they are paid by the sectional title scheme themselves or the homeowners association. Much like when you go and take out a loan at the bank for a home loan, car loan, personal loan, there will be an initiation fee. I've just recently taken on a new bond. We're moving home. That was 6,700 Rand that I had to pay the bank to give me a bond. So similar situation here. The sectional title scheme would pay a raising fee or the initiation cost, and they pay a monthly admin fee. Hence, you will see on these statements, there is absolutely no fees deducted from your funds. It is all covered by the sectional title space so that you can earn the Prime Plus 5 or the Prime Plus 3. There is an asterisk. There's always the T's and C's, and I never call them fine print because I give it all to you before you ever allocate money. Ladies and gents, we've said to you it's on average 3 to 5 years. The body corporate can make repayments during that period. That's why there's a column provisioned here for repayments. They are never penalized for repaying their loan. That money will physically land back in your bank account. This is not like a unit trust or an ETF where it can be reallocated automatically. If that body corporate repays early, you will receive that money. In this case, it would be paid back to Example Bank. So whoever you bank with, you will get those funds back. Much the same way you can pay your home loan back quicker or your car loan, and that financial institution can never penalize you either. So where's the potential fee for you? Possibly if you need to exit. So the body corporates haven't made a full repayment. In the first 60 months, if you want to make an exit, your exit fee is 10% of the amount you wish to exit. So if we take this person here, million, their current balance is at 1.2. If they said to me, right, Terence, I need my 236,000 Rand back, they will pay a fee of 23,000 Rand. So they'll get back 210,000 Rand. If they wanted all their money out, they would pay 120,000 Rand and they would get the leftover. From month 61 and onwards, that drops to a 5% penalty fee. So there's a fee disclosure for you. Again, all in the documents. So before I end my slide, and hopefully John T has a couple of questions for us. Ladies and gents, this was a lot of information. I try to keep it easy, but we do have a great deal more. You are welcome to WhatsApp me. If possible, please do that. You're welcome to do voice notes or texts. I'm not always able to answer phone calls, obviously being in consultations. The website specifically set up for this is primeplus.co.za. And if you would like an info pack, if you would like a returns projection, please send me an email. Terence, that's TERENCE at Rich Ideas. Put Jaltech in the subject line. I'll pop you back an info pack. If you want to know what kind of returns you'll earn or how your money will grow, put in there that you want to allocate 100 grand. And I will send back to you a projection. Just give me 24 hours to do that if you don't mind. And ladies and gents, that comes to the end of my presentation. I'm going to hand back over to John T and fire away with some questions, sir.
Terence, thank you very much. That was really informative. I think very applicable to a large portion of the market. And there's only one question, which means you've done an exceptional job of explaining the opportunity. And the question is, how does the tax on interest impact the overall return? And how do we best structure to optimize the return?
Perfect. So how best to structure? That's a very personal one. We've got to look at your situation and what other income you might have, what other interest you might have, tax brackets, marital contracts. So it's not an easy answer. So I'd rather say, let's have a chat on that. How the tax works is it is interest earned. Ladies and gents, if you are under the age of 65, you can earn 23,800 Rand a year tax-free. And if you're over the age of 65, that's 34,500. So on those statements, you would have seen the interest earned. Just want to maybe go back quickly and I'll put one up on the screen just to show you. And you would then include that in your tax return that you would submit to SARB. So in this situation, this person allocated R1 million. This is slightly over a year though. So that's May. Let's go to the end of Feb. We would add up those figures there. And that's what you would declare with SARS. When you get your statement, you'll see here for the current year interest is an example. So from the 1st of March 2022 up to December 2022, this person had earned 100K, let's say, depending on their age, they would knock off those exemptions. This would be added to gross income. And then again, however their tax affairs are set up, there could be tax payable on it. What I have found in practice, though, for the person asking the question, is the tax payable is often significantly lower than what you would expect. So we can do those calculations for you on a case-by-case basis.
Thank you. One more question. What happens on death if the investment's in the investor's own name? And is there an exit penalty?
So at death, it would form part of your estate. We can't nominate an executor, a beneficiary on this. So your executor would need to deal with that. And the beneficiaries would now be able the option whether they would want to leave the funds for the rest of the term, and we would just simply do a name change. Or if they wished to exit, yes, there would be an admin fee applicable. It's not as significant as that penalty fee mentioned. So it would be linked to the timeline remaining on the contract.
Another question is, please clarify the investment term. In other words, is there a liquidity event? Yeah, at the end of the term.
John T, I like to explain when I do these info sessions, I want you to think of it as a 5-year fixed deposit. So the sectional title scheme or the homeowners association will repay on average within 3 to 5 years. We can't define that. I can't say, all right, Terence has 100 grand. I want this in the 3-year product. That unfortunately doesn't exist. The average timeline is 3 to 5 years for the two products that have the capital growth where your money is compounding. The product where we have the income paid out, that won't have capital paid back should a scheme repay. It will be reallocated because we want that income recipient to have the consistently predictable income paid to them. So we don't want their capital to drop in value and now their income will drop accordingly. So there isn't liquidity inherent in the product. It's not a liquid-based product. But if you did need to exit early, that is possible, but sadly, either the 5 or 10% penalty fee would apply. And that's why, John T, in closing, this must form part of an investment strategy or an investment plan to ensure that you still have liquidity in other places.
Perfect. There's another question. But before I get to that question, the recording of this webinar will be made available to everyone. So I can see a lot of questions directly to me are being asked. Another question is, would you recommend the income option for conservative clients in retirement?
Absolutely. Absolutely. This is in my product suite, the most conservative, safest peace of mind product that I have. With absolute certainty for a retired client. Yeah, we are doing these a couple of times a month for retired clients that need income. But again, John T, that's where we have to have the discussion and not to put all funds in because of the liquidity requirement, especially in retirement. We need to make sure there's funds available maybe for medical expenses or other lifestyle changes.